The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Good day from TFNN. Welcome to the August 15th. Wonderful Wednesday edition of today's Trader's Zed Show. Of course, doing it in the slot this morning, Larry Pesavento show from 9 to 10. So if you are listening on the normal Trader's Zed Show, thanks so much for doing it. Know that if you send me an email at steve@tfnn.com, I'll still respond the best I can, but I won't be able to answer your question live on the show. But I would love to hear from you. So you can always reach me. You can always send me an email, steve@tfnn.com. I just ask that you put in the subject heading radio show question. That way I can gather your email from amongst, between now and the end of the show, I will get 100 emails. Most of them junk. Yours is the one that is most important to me. So with that subject heading, please put radio show question. I'll look at any instrument you want, any time frame, and give you my best analysis as to what things are doing. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow futures trading down 162 points, 25,130 is a print. NASDAQ futures off 63. They're printing out at 73.94. S&P futures down 17. Russell down 8 points. You've got the U.S. dollar index up 7 pennies, well, 70.075. It's straight down at 96.68. Gold is off $9. Silver down 30 cents. Light sweet crude back 68 pennies. So we have a lot to look at. Leading the charge here to the upside, you've got Canopy Growth, Energen Corp, Tilray Inc., Kronos Group. Those are the individual stocks that are leading the markets to the upside, pre-market, I should say. To the downside, it is Amazon, Diamondback Energy, Constellation Brands, Tencent Holdings, Alibi, and Tesla that are moving to the downside. We could take a look at those equities. Of course, I want to look at what you want to look at. And right now, it's probably, hey, Steve-O, what's it mean with regard to the futures trading lower? Or what is it that we should be watching this morning? So as and that's a great question. Thanks for asking that. I'm not sure who asked that, but thanks for asking that. One of the levels that I would be paying attention to today, if I were you, would be inside the NQ. Now, the reason is we can take a look at what the NQ did at its most recent high. Let me just get my crosshair out here. It made one of those beautiful Rhodes Momentum Indicator signals, a topping pattern out here. It did that at about 2 o'clock in the afternoon on August the 9th. We can see my system automatically begins drawing these diagonal lines, either at the top or at the bottom, when markets begin to make that pattern. The cool thing about this pattern is all you have to do is wait for the bulls and the bears to show up. Now, this is a 5-hour time frame that we're looking at. In the upper left-hand corner, you'll see 300 minutes out here. The bears showed up. Buyers and sellers have but one responsibility to you and I, especially at the completion of a pattern, and that is to give us a signal. It's not a smoke signal. It's a bullish or bearish reversal candle. There's really only 7 of them out there. Now, there's more than 7 bearish candlesticks, but there's only 7 that you really need to know. That's what I teach subscribers who subscribe to Mastering Probability. But in this case here, I teach you which candlesticks to pay attention to, how and where and when and why. In this case here, what we saw was price not only generate a bearish engulfing candle. This is at about 5 o'clock in the afternoon, but by 5 o'clock in the afternoon. But we also saw the price close below Stevie's green line. Now, green line out here means that we still had a rising price oscillator above 0. But the oscillator was falling. So it was above 0 and falling. Now, that just says, okay, price is going to retrace. Retrace back to where? You'll see a little red dashed line on my screen out here. This is actually from the bar at 2 o'clock in the afternoon on August 6th. The low there, 73.8750. That, in essence, is the number to be watching. This is created by using Tom DeMark's system. This is just simply taking a look at his setup system using the 5-hour time frame. What we're looking at is successive bars where each bar closes above the bar 4 bars earlier. Yeah, and even if it's confusing, you don't have to worry about it because it's labeled on my system. Once that occurs, and we had the bar, the ninth bar, that formed here at 2,300 hours back on August the 7th, then we can take a look at the low of that set of candles, bars, however you want to look at it, and we can go ahead and draw our support level. Interestingly enough, whenever you get a topping signal, you have to go then find support. You have to ask that question. It's like playing a game of chess. Okay, what's the next move? And the next move with regard to a topping signal is price is going to go back to support. We take a look at support levels inside this time frame chart. When that signal was generated, this is the one at 5 o'clock in the afternoon, the RMI, the Rhodes Momentum Indicator topping pattern out here. We already had that red dashed line established. That became support. What did price do? Price came right down to that level at about 4 o'clock in the morning. This on August the 13th. Today is the 15th, and price bounced off of that. Not only did it bounce off of that, you saw the bulls come in, form a bullish engulfing candle. We also had a brand new profile, TAS market profile that formed. Those are the red, not red, the black dashed lines on my screen out here. So we can see that what price has done this morning is pulled right back to a level of support. Now that's using the 5-hour time frame. You might look at me and say, yeah, I don't use a 5-hour time frame, Steve-O. I use something shorter. So what should I be looking at? Well, then if you use something shorter, not Frank Shorter, although I would mind listening a little bit of Frank Shorter out here, but let's go take a look at the shorter term time frame, the NQ. Because see, on a 5-hour time frame, what you and I already had was a level of support where price was going to try to pull back to. Now, I'm not saying that that's going to hold. In fact, if it doesn't hold, that's going to be telling you something. What's it going to be telling you? It's their head, because the bulls will have failed to hold a key level of support. Now, if we take a look at a 30-minute time frame chart out here, we're going to see that we had a hammer candle form. This was a couple of hours ago. The exact time was at 8 a.m. I guess that was just an hour ago. So we also know that here the bulls have shown their cards. They are trying to protect this level. I can't guarantee that they're going to protect it, but I can tell you they are protecting it as we speak right now. Now, interestingly enough, as we're coming on the air, what you'll see here, if you look, you'll see that there was also a Tom DeMark setup 9 count out here, number 9. Now, that is equating all the way back up here. If this holds and you were to ask, well, then where is resistance on any kind of a bounce? Well, the first thing is going to be Stevie's red line. That's going to be at 74.13. If price can bounce and take over that level, there's no reason to believe that it can't. It can. Will it? I don't know. But if it does, then what you're anticipating is the next move up to the 74.55 level. The beginning of that Tom DeMark setup count all the way to the downside out here. That's what the markets are doing when we take a look at a 5-hour time frame chart for the NQ. Why the NQ? I don't know. Why not the NQ? The other thing you and I can always do is just take a look at the ultra short-term time frames. I don't know if I can call them ultra and short-term at the same time, but I just did. This takes a look at this is using Stevie's black box system. The black box system uses, in essence, almost all of it. That's what I mean by in essence. The exact same tools that have led me to become the #1 market timer for the S&P 500. So the answer is, yeah, I know my stuff. And I've programmed that for each of my subscribers out here so they know exactly what hundreds of markets are doing and the signal that they're generating. There's no short-term bottom signal yet for any of the equity futures contracts. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
Of least resistance, David White's daily market letter gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So one of our dinners is asked to go take a look at gold. That's a peak D. So if we take a look at gold, the chart here that you're looking at right now, we're looking at 4 different time frames with their different market profiles. You might say, what's the market profile? In essence, it's a hidden. I won't say in essence anymore today. I've said it twice. That's it. Hey, if I say it again, yank me off the air, would you? But in essence, okay, there you go. I'm going to go golfing right now. No, what they represent are hidden, not to everybody, not to you and I, but hidden levels of support or resistance. When price trades below a level of support, and here we're looking at a 60-minute, a 240, a daily, and a weekly. Support, by the way, would be, in this case here, would be the green horizontal line. Then that says, well, you better be able to have a system that identifies a bottom tick, because right now support has broken. And so there's absolutely no reason at 9:19 in the morning for any of you to try to go ahead and take a long position in gold. Now, maybe you're really short-term trader. You know, you're using 2-minute charts or 5-minute charts. I'm not speaking to you. That doesn't mean I'm not speaking to you. It's just that with regard to my statement, I'm not speaking to you there. But here what we can see is levels of support have been broken on all of these time frames. So that then begs the question, well, where is gold headed to? In this case here, we'll go ahead and take a look at a monthly chart, a weekly chart out here for gold. And our eyes immediately go to the prior swing point out here. So let's go identify what that price level is. That price level would be 1166. So you're at 1186. That's another 20 bucks to the downside. Gold is trading inside that swing point. The swing point, the top of which, again, this is the trading day from December 12th, 2016, is 1209.80. As long as price trades within this swing point, volume or not, it says that that level is likely to be tested. Doesn't say it will hold, and if it doesn't hold, then we go back to the next swing point. The next swing point out here takes you back into January, well, November 15th, November 30th. It's a weekly chart. The beginning, November 30th, 2015, that's at the 1102 level. So where is it that gold is headed to? 1166, maybe 1102. in lieu of any other signal that we have. That's taking a look at a weekly time frame chart for Goldilocks. Well, what else can we do to shed some light on gold? Well, one of the things that you and I can do, and I used to do this show for years at 9 o'clock. Now, I believe I took the show over at 9. I think it might have been, was it Bud that was doing the show? I think it might have been Bud that was doing the show from 9 to 10. Or in any event, it doesn't matter. We're going to look at what Bud created were these primary trading range boundary lines. Now, he did everything visually. You can't beat doing things visually. But I just simply wanted to automate that system. And what the system does, and I almost said it, didn't I? Whew, caught myself there, because I do want to finish the show. I don't want to be yanked off. But what the system is doing, what the automated system is doing, it's looking for the largest number of either opens or closes for the time frame we're looking at. This is a monthly chart here for gold. And so my system automatically, in this case here, just went back to the 2009 time frame. So in essence, there I go, I said it again. I don't know where that came from. Must have been something I ate this morning. Just a couple, there's some egg whites and some spinach. But in any event out here, so taking all that data and identifying the largest number of either opens or closes on a monthly basis. And those identify levels of support or resistance. Well, interestingly enough, the next level of support, and it's a decent level of support. Decent, what do I mean? The largest number since 2009 on a monthly basis of opens or closes comes in at a price point of $13.24. And there were 11 of those on a monthly basis. The second number is 1185. Well, we're at 1191 right now. So price is moving right into a level of support. That is different than taking a look at the prior swing points that you and I just did when we looked at the weekly time frame chart. So if gold is going to find some support, it's going to do it soon, relatively soon, or should. There were 9 instances. That means 9 months where we had open and closes, and that's the second. And that price difference, by the way, 1185 to 1324. That's what sets up all of those other horizontal trading range boundary lines, what Bud used to call primary trading. Now I could go ahead and put the midpoints in here. I'm not going to do that. There's no reason for us. So that would be the midpoint in between these primary levels out there. But I don't really want to do that. It's just going to clutter up the chart. Here's what you need to know. You've got the price points that we looked at, prior swing points out here. Again, that's taking us back, in this case, on a monthly chart, December 2016 or December 2015. The weekly is a little bit different out there. And if price closes below 1185, a horizontal trading range. Yes, it's only the middle of the month. Today is the 15th, and these are monthly. So can price move down there and find support? Yes, it can. But this is what gold is doing. So watch this 1185-ish type area. What else is it that you and I can take a look at? Well, that's the daily time frame. I don't want to do that. Instead, what I want to take a look at is understanding gold. Quite frankly, understanding every single market out there, whether it's the Dow, whether it's the S&P, whether it's gold, whether it's oil in them there hills, whatever it is. And that's this. For any of us to think that we're the only ones that are traders of this commodity, it's just not the case. What do I mean by that? I mean, if you happen to be trading gold, in your local currency, your base currency is euros, you could give a rat's patootie with regard to what gold is trading for in dollars. You really want to know, if I buy gold today in my currency, am I going to make money? And if you're sitting over in Tokyo, or shoot, maybe through a typhoon right now, you're over in Kyushu, hey, let's send some white light out. I think they're getting hit pretty hard. And hey, what a great island. In Kyushu, that's where all that coral calcium really comes from. That's the island where people basically live to be, they never die, which is a beautiful thing. Who wants to die? This life is too wonderful. But yeah, it's Kyushu, and not as good as the sushi up in Hokkaido. But it's still not bad. In any event, if you happen to be in Kyushu, if you happen to be in Tokyo or Hokkaido, you're interested in buying gold and understanding what is it doing in your currency. You don't care about gold in dollars. Now, I would say not so fast there. Because if you really want to understand what gold is doing, you need to understand what gold is doing in all the major currencies. Because if you're wondering, when you buy, who's selling, well, it could be a currency issue that has the sellers. If gold's going lower in yen, I'm not buying, I'm selling. And if gold's going higher in dollars, maybe you're buying. If you're wondering where those natural buyers and sellers are, well, now you know. As we take a look at this monthly time frame chart here for gold, what you're going to see are trend lines in dollars, left-hand panel of our screen, in euros next to it, in yen next to that, and you're going to see that what gold is doing this month, the month of August, it is breaking a trend line. The month is not over. This says that nobody wants to own gold right now. What is happening is folks want to sell gold. We're seeing it uniformly. Uniformly? That's not even a word. You know what I'm trying to say out there. You've got to pay attention to your P's and Q's, or really your euros, your yen, and your pound sterling out here. What's gold doing in those currencies? And right now, everyone is selling. Will gold find support at 1185 in US dollars? Only if it finds support in euros, yen, and pounds. Steve Rhodes from TFNN.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
off to the races. We got the Dow trading down 131 points, 25,171 is the print. S&P's off 16. NASDAQ 100 down 60 points. Russell's off 7. Semis are down 12. So we've got red arrows across the board in all the indices. You've got that spot volatility index up $1.48 right now. That's up positive 11.12%. That's the rate of change since yesterday. So what you want to do is, and look, if you were listening to the show right now, the normal 1 p.m. slot, I'm taping it today between 9 and 10. I will do the same thing tomorrow. So, and feel free to send me an email. You can send it, now if you're listening to it, meaning between 1 and 2, that'd be 1:30 right now. And I'll go ahead and answer your question live on the show tomorrow. So feel free to do that. Of course, I would love you to tune in. And then on Friday, I'll be back to the normal schedule. Right now, you've got, so the thing you're going to be watching for at the end of the trading session is the spot volatility index. Does it have a one-day rate of change greater than 10%? If so, just like yesterday, you saw a bounce, a nice healthy bounce. The day before, we saw a bounce that, although that was intraday, you would expect and anticipate the exact same thing. The more bearish thing is that it's just a gradual decline today, and a decline still nonetheless. And the spot volatility index is less than a plus 10% one-day rate of change. That is more bearish. I know it seems like it should be the opposite, but we don't really care about what seems. What you and I want to be able to do is master the probability of this market. And if you understood, if you had the experience of that one-day rate of change, a lot of times people call the VIX index so many different things. I call it my friend, because there are such great tools to help you and I with regard to timing out here. Did you know that the spot volatility index, when it exceeds all the futures contracts out there, when it does that, it is a sign of a bottom, of a dislocation that is out there? And if you didn't know that, go back and test it yourself, or just subscribe to Mastering Probability. You don't have to do all that work. I do the work for you and let you know exactly what's going on in the market. Now, there's a question out here basically with regard to, in essence, it is when do I see the next bottom in the market, or how will I know? What is it that will unfold where I would then say to clients from a trading standpoint, because from an intermediate standpoint, a long-term standpoint, really is what I should say, we are bullish. We have been bullish. You should be bullish out here. You should not be afraid of the U.S. stock market. It is where all the money is pouring into. How do I know that is a good question, right? How do you know that, Steve-O? And I know that just simply by taking a look at the Dow or any of the other indices, but I'm using the Dow because it is the weak link out here, and we can compare it to many of the other world industries. In the upper left-hand corner, if you're watching us on Tiger TV, you see the Dow. You see just a simple trend line. You don't need to be a technician to do this. You just need to know that when a trend is broken, depending on whether it's the upside or to the downside, you have a breakout. What we have going on inside the Dow, even though it's pulling back, this is just intraday stuff that is going on inside the Dow. It has broken above resistance. Has that happened in the United Kingdom? The answer is no. Do you want to put your money in the Dow, or you want to put it in the United Kingdom? These are the decisions that traders around the globe are making. If you take a look at Australia, you want to put your money in the Australian stock market? Is it breaking out or breaking down? It's breaking down. Do you want to put it in Canada? Maybe, but not just yet, because it has not broken out. Do you want to put it in China? No, you don't. It's broken down. These are weekly time frame charts that we are taking a look at, not daily. That way I can condense data in here. Do you want to put it in India? Maybe, but go over and take a look at the rupee and make sure you've got your head wrapped around the rupee. But yes, at least in India, you do have a breakout of a trend line. Do you have that in Germany? Heavens to Betsy. And who is Betsy, by the way? You do not. Do you have that in Japan? No, prices underneath the trend line. And Turkey jerky smirky out here. Of course, you're not putting your money in Turkey out here. I just threw that in there just for the heck of it. We could put some other country. The point is, money has to flow somewhere. And where is it flowing? It's flowing into the U.S. stock market. It's not flowing into gold across the globe. You and I already took a look at that. That's not where it's flowing. It is really all about currency, isn't it? I know you and I primarily only think in terms of U.S. dollars. We were trained that way. But we can't if we want to be the ultimate money managers. And by being the ultimate money managers, it means we've got to take a look around and try to understand what's going on. Here's a look in commodities Want to understand, should you be investing your money in commodities right now? Well, all you have to do is this simple same trend line analysis. Here's the weekly time frame. You've got gold on the left-hand panel, very upper left out there. What's gold look like to you on a weekly time frame? Breaking out? Are you kidding me? Having a nervous breakdown. How about wheat? Wheat hasn't broken out. It got back up to a prior swing point. There's still a wedgie pattern that is in place out here. We take a look at the continuous contract for wheat. Corn, there's not like people are rushing in to put their money in corn. Are they putting it in silver? No, that's right here. That is on the left-hand side, panel number 2 to the downside. Is it in rice? No, it's not in rice. Is it in natural gas? Well, natural gas actually has pulled back to a rise, so it's trading also in a wedgie type pattern out here. Is it in light sweet crude? Well, light sweet crude has a wedgie pattern. At least we've got the rising trend line inside of inside of wheat, inside of natural gas, inside of crude oil. Well, that's basically about it. So money's not rushing into commodities either, is it? Kind of interesting. So where is the money flowing? The money is flowing, well, it's flowing into the U.S. dollar. Here, if you take a look at the left-hand panel, and I know I haven't answered the question, what's it going to take to get traders to a long position inside of the U.S. stock markets? I'm really just laying the groundwork out here and why it is that we should be looking at the U.S. stock market. All of this stuff that you hear on the boob tubes out there, whether it's the Bloomberg channel, whether it's CNBC, whether it's Fox Business News, where they just parade people out for the most part that tell you about fear and trade wars and this and that. What they're not telling you about is what's really going on across the globe as far as a trader is concerned, where things are either breaking out or breaking down. With regard to the U.S. dollar index out here, you want to be in the U.S. dollar index? It's the one that has broken through a trend line. Do we see that in the yuan? The yuan has been devalued again. The yuan, the Chinese are doing nothing more than taking action to try to overcome the, they're pretty smart about it, certainly in devaluing their currency, I suppose, with regard to the tariffs. Because if they leave the currency where it is, there's going to be even more exports of products from China to the U.S. because smart U.S. guys are not pegged to the U.S. dollars. They're buying their product in yuan. They're like, hey, keep talking, keep smacking the trade war stuff. The folks that are sitting over in Benton, is it Benton? Is that the name of the city in or a Walmart area, Walmart, Costco, or what have you? These guys are licking their chops. They are loving this talk about trade wars. Just loving it. Take a look at the Japanese yen. Yeah, maybe slightly breaking out. How about the euro? Not a chance. How about the loonie? No, it's not. How about the Great British Pound? No, it's not. Just take a look at the DAX on the bottom panel, the Shanghai in the center on the bottom, and then the Dow. The point is here, as we come into this break, where is the money flowing? Not flowing into commodities. It's flowing into the U.S. stock indices out here. This is where the money is, and it's flowing into the U.S. dollar index, and it's going to continue to do so. It is important to find the next bottom. So let's go out and see if we can do that. Steve Rhodes from TFNN.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Welcome back, folks. Let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing great. I heard part of your show, and I heard you say that gold is nearing an area of possible support at 1985. And I'm wondering about the possibility, if we get some kind of a bounce, I'm wondering about the possibility of shorting the GDX. And I was wondering if you could tell us the areas in the GDX of support and resistance.
So with regard, so 1185 was one possible. I was not suggesting that someone go out and buy gold right now. And the reason I say that, Mike, is that if we take a look at gold in all the currencies, it's being sold off. So there's no buyers that I see out here in major currencies. So whether that's euro, that's yen, or that's pounds out there. And we'd already know that there's no buyers in the case of U.S. dollars. So is price, in the case of gold, heading towards a support level of 1185? Yes. Will it hold? It won't hold unless we see buyers rush in all of those currencies out there. With regard to your specific question, where is support inside of the GDX out here? Well, the support is, did you say support or resistance?
Well, what I was looking to do is, if we get a bounce in the GDX, the possibility of shorting it.
Yeah. So the question would be, well, where could the bounce take you up to? And that's a great question.
If
2026.
If indeed we do get a bounce on it.
Yeah, 2026 would be the first level that I would be looking at. The reason, Mike, that I come up with that number is because that happens to be Stevie's red line out here. That's that oscillator on change line. And what we can see here in the GDX, let me get my crosshair out here, is you can see that this line has acted as resistance since July 13th. So it's now August the 15th for one solid month. Any time we've seen a bounce, it has bounced into that red line, as it did on July 26th, as it did on August the 4th, as it did on August the 8th, as it did on August the 10th out there. And so that would really have to be, that would be the answer to my question. Where is it that the GDX could bounce into that you would want to consider putting it on a short? I would have to say it would be Stevie's red line. Now, right now, that's 2025, but this will change over the coming days. So it may not be exactly that level, but it is Stevie's oscillator and change line, which, by the way, folks, if you're new to that terminology and you would like to learn this line, because this just shows you how important of a tool it is, If you sign up for Mastering Probability, that will be put on your members page right now, and then you'll get another workshop that I'm going to do next week that I teach traders about a momentum system out there. With regard to that's where you would look to sell it if you can get it. Don't know if you will. What it looks like to me, Mike, is that the GDX is headed for 1628. The reason why the 1628 area, 1628 happens to be the bottom of its monthly profile out there. And if I take a look at what the GDX has been doing since January of 2017, so for a heck of a long time, right? We're talking about 12, 6, 7, 19 months or what have you, has been consolidating between about the 26 to the 20 level. And that consolidation provides you and I with a measured move. Usually when you break through a consolidation, you have a measured move equal to or greater than that consolidation. Well, that measured move takes us to approximately $16, and at 1628, we have the bottom of a monthly profile. So that is what our target should be right now. Does that help answer your questions?
Yeah, it does. I mean, if we get a bounce up to 20, the oscillator on change line, and it fails, it might be a good risk-reward trade to short it down to 16.
Yeah, and then the only other thing you need to do is go take a look at gold, see how it's trading in euros, yen, and pounds, and then you would have the complete picture to go ahead and make a good decision, I would think.
All righty. Thank you very much, Steve.
You bet. Thanks for calling. That was Mike in Ormond Beach. We had a question inside the 10 with regard to if we could take a look at the spot volatility index and what is its message. And the message is the following. At 9:46 in the morning, the spot volatility index is up 10.82%. 10.82%. If you see it close today above 10% one-day rate of change, you're going to see some type of bounce or bottom in the S&P 500. At least in the futures market. If you see a spot volatility index at the end of the trading session, the market trades lower today, and the rate of change is less than 10%, you're going to see the markets continue to move lower. That is really the message of the spot volatility index. Plain and simple. You can see the other blue lines on my chart out here. When you get that one-day rate of change, you either get a stalling or a bottoming signal out here. Just go do that work yourself and see it and say, how the heck did Steve-O figure that out? It was through a lot of trial and error. Look, we only learned two ways out here. We can do it ourselves, right, by trial and error, and that takes a long time, and it costs a lot usually to do that. Or we can go find somebody that's actually figured out how to do it and then just simply use them as a coach, mentor, or what have you out there. And that's really what my intent is behind Mastering Probability, to provide the newsletter service, provide great education, great trading ideas, and there are plenty of trading ideas that are in the newsletter each and every day, providing support and resistance levels just like that, not to snap your fingers, but right there on the screen or on the page on the newsletter out there. And so, give that a shot. Plus, again, I'm doing a workshop next Wednesday. With regard to where is it that we could see a market bottom? Because that was a question as well, and I didn't address that. I was trying to give you the larger framework and the larger picture. And the thing is that because I don't think you will hear it many other places, and so I'm saying this with conviction, and I believe I at least have some of the credentials to be able to say, okay, this guy here, that's the #1 market timer for the S&P 500, and this is truly his take, and he's just laid out the exact reasons why. So this is no willy-nilly stuff. The S&P 500, the Dow, the NASDAQ, the Russell 2000, this is where money is pouring into across the globe. Money has to be put to work somewhere. You see, the majority of the money that is being managed by large broker dealers is coming from the wealth management area. And that money is always put to work. You realize how much cash it is that they keep in those accounts for the most part? About 3%. Now, that money is diversified between foreign equities, U.S. equities, bonds, commodities, and so forth. And I actually show inside the newsletter each day the typical portfolio for a wealth management fund, because that way you can do those same things and then figure out where it is that you should be placing your money out there. And right now, U.S. equities, forget about all this stuff that folks are telling you. The U.S. equities are going to continue to move higher. It is all about trying to find that next bottom. Where's it likely to occur in a market that pulls back and gives you that gift? Where would it be a nice early Christmas present? Well, when I take a look at the New York Stock Exchange, so that's what you and I are looking at right now, it would be taking a look at its advanced decline oscillator reading and seeing what happens as it gets to the -250 level. It's at -103 now. I believe that's where it wants to go. And the reason is because it had a divergent pattern. These are these green diagonal-ish lines on the top panel of this chart, whereas the advanced decline oscillator reading had a declining oscillator. And then what takes place when the spot volatility index gets above the 50-day exponential moving average? I know it's a mouthful, but this is it. This is the pattern. What typically occurs is that advanced decline oscillator reading gets all the way down to minus 250. Sometimes it's below minus 250. And that's where you have to be able to see where the rose momentum indicator bottom signals are in the equity futures contracts. And that's what I do. That's my specialty. And you know how I learned it? By becoming a member at TFNN, by learning from Tom, by learning from Larry, by learning from Basil, by learning from David, by going off on my own and doing a lot of trial and error. This is Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Michael P. writes in and says new profile. He's looking for Tesla and is wondering if there's a new market profile. And there is a, I'll tell you where the profiles are on a daily basis out here, Michael. And this one here formed on August the 10th, so 5 trading sessions ago. And the top of the box happened to be really where there was just simply key resistance. If we pull this daily chart back here for Tesla, we're going to see a red horizontal line, which lines up really with the swing point from June 23rd 2017. We can clearly see, just using, in this case here, horizontal trend lines, how price got up, in essence, what Tom would call a 100% move of a move, and it made that 100% move of a move back on September of 2017. Couldn't bust through it. Went ahead and moved lower, created an A to B equals CD to the downside. Then we get through, and this is the day of the go private announcement, August the 7th. Price gets all the way up there. Can't bust through it, and now we see a pullback. So the pullback here, or the bottom of the box, you asked for the profile, 328.43 is the next level of potential support. And it looks like that's where Tesla's going to go. So there was a breakout in Tesla on the trading day of August 2nd. There was 23 million shares to the upside. Yesterday, it was as it was pulling back with 1.4 million shares. Today, no, I'm sorry. What was I saying? 7 million shares. Today, you've done 1.4 million shares. So, Michael, I'd say Tesla may find support at 328.43. The breakout actually is the bottom of the trading session from August 2nd, that gap to the upside, 323.16. So support 323.16 to 328.43 on Tesla. That's on the daily profile out there. The weekly, the monthly, they're so far so much lower. By the way, I'll give you what those are. In the weekly, it'd have to be 313.55, the top of the box. And on the monthly, right now it's 283.50. That's the center of the box. So that's what we see inside of Tesla. Hey, folks, thanks so much for being here. If you're listening to the live show, well, that's between 9 and 10. But if you're listening to my 1 o'clock show, catch me tomorrow. I'll be doing Larry's show from 9 to 10 again. Of course, this is being replayed from 1 to 2. And then I'll be back to normal scheduling on Friday. Thanks so much for being here. Have a great day. Stay tuned for the Bull Bear Binary Option Hour. Tom and Tommy. Take care, folks. Have a great day.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.